From the land to Grant University in Urbana-Champaign, Illinois, this is the closing market report. It is the 27th day of April, 2026. I'm Extension's Todd Gleason. Coming up, we'll talk about the commodity markets with Curt Kimmel from agmarket.net out of Windsor, Illinois. In Ames, Iowa, we'll discuss the agricultural fundamentals with Chad Hart, economist from Iowa State University. And then we'll turn our attention to the weather forecast with Mark Russo out of DeKalb, Illinois, and EverStream Analytics, all on this Monday edition of the Closing Market Report from Illinois Public Medium. It is public radio for the farming world, online on demand at willag.org.
Todd Gleason services are made available to WILL by University of Illinois Extension.
May corn for the day settled at $4.60 3/4, up 5 3/4 cents. July $4.69 1/4, 5 3/4 higher. In December at $4.89 1/2, up 5 1/4. May beans 13 1/2 higher. They settled $11.77 1/4. July $11.92, up 13 1/2 cents. In November, up a dime. They finished at $11.65 3/4 cent. Bean meal $9.50 higher. Bean oil for the day up 35 cents. Wheat futures for the soft red July 13 higher, $6.29 3/4. The hard red July at $6.75 1/4. Both of those, of course, the harvest month, up 5 1/2 cents. Live cattle futures for the day $3.72 1/2 higher. Feeders up $6.50. Lean hogs, $2.27 1/2 cents higher for the afternoon for 100 pounds. Crude oil in the West Texas, or the WTI, at $96.76, up $2.36. And the Brent at $108.86 a barrel, up $3.53. Here to talk about these numbers is Curt Kimmel from agmarket.net. Hello, Curt. Thanks much. We've had an interesting weekend. The market staying very calm through that, though it did begin to rally during the day. What was the main impetus behind it?
Well, several factors. We'll hit the soybean market part of it first. Evidently, there was some meal from Argentina bound for the EU or the Netherlands. They saw 2 to 3 cargoes had trace amounts of this HB4 gene in it. It's been approved by the U.S. In fact, it's been approved by China back in 2022. They rejected those loads. Basically, I didn't know anything about it till today, but it's a gene that's been bred in to help drought, make it more drought resistant. So I think it's from the sunflower part of the plant. So they said it's like 13 years ago or so they've been doing this. And so that showed up on the radar. That triggered some pretty decent buying in the meal. Meal finished anywhere from $8 to $9 higher. Unwinding of the meal oil spread, and that spilled over into the soybean complex. So that's putting the beans in the position in the technical charts to maybe challenge some overhead resistance here. So it's nice to see starting out the week here strong. Corn-wise, Brazilian corn is basically kind of on the short side for moisture, so that's providing some support in the corn complex. It continues to kind of climb the wall of worry here. We're hitting some retracement levels back up to the upside, so it's kind of in a position maybe challenge their highs. Then on the wheat side of the equation, there's just been some irreversible damage. It's going to be hard to fix in the western wheat belt. Then too, there's some isolated cases where there's been too much rain all of a sudden. This afternoon's wheat conditions reports expected to show 29% of the good to excellent category versus last week's 30% good to excellent. So that wheat crop continues to be downgraded or a little bit of a concern, even though we have ample supplies around the world.
The meal would be playing, particularly from Argentina, an outsized part in today's trade, mostly because this is where meal is shipped out of Argentina. That's their primary source of shipping for the soybean. They don't ship many whole soybeans. Brazil, United States, mostly shipping whole soybeans. The United States would be the West Coast for bean meal, and that's brand new as a development related to soybean oil. How long do you think that this can play in the marketplace? Because if they're really rejecting those loads, they'll have to fulfill it from somewhere, and I'm not sure where that'll be easily done from.
Yeah, exactly. We'll need to see confirmation of this and see if there's some additional concern. I don't know if they're playing from the Chinese handbook of trading commodities or not. You reject it, and all of a sudden you buy a discount from that location. So the trend needs to continue. 2 to 3 cargoes. They, like I said, there's a fairly large amount there, so we'll have to monitor that as we go. Bean meal has been on the short side due to the fact that the trade's been more interested in buying oil, selling meal, so most of the emphasis has been on the bean oil side of the equation. But yeah, it's definitely a new item that snuck in the back door here that we need to watch.
You mentioned the crop progress report. What do you think it will show for corn and soybeans today?
As a nation, we're going to be maybe at average, a little above average. Corn planting progress expected to be about 23% complete as a nation. Soybean planting progress, 22% complete as a nation. Now, locally on east from our area, there's some producers well done with beans and maybe half their corn in. As you move north and northwest, it's a little slower progress or start. I'd say we're probably 25 to 30% complete. Now, one spot, Monticello, Iowa. You take the eastern part of Iowa into portions of that northwestern Illinois. It's awful hard to turn a wheel there. Might be only 5%, and some's not started yet. So we'll have to watch that area real close, Todd.
Hey, thank you much. Curt Kimmel is with agmarket.net. One quick ag news item today, along with a webinar announcement for this coming Thursday. We'll start with the news. The ceasefire in the Middle East has eased the price of crude oil, but nitrogen fertilizer prices have yet to follow. Retail prices for urea and hydrous ammonia, the UAN solutions, climbed right through the mid part of April as shipping in the Strait of Hormuz remains far below pre-conflict levels. Insurance barriers, of course, continue to deter ship owners from returning to the route too, writes University of Illinois agricultural economist Gerald Mashongi on the FarmDoc Daily website. You can look for that article. For agriculture, the effects of this disruption are evident in nitrogen fertilizer prices. Urea is up about 41% from the week before the fighting started in February, and anhydrous ammonia has increased by more than 30%. These fertilizer prices are adding roughly $30 to $55 an acre in cost for this year's corn crop. Those costs would be added to the $40 to $80 per acre losses the U of I Ag Econ team already pegged for the 2026 corn crop in their January crop budgets. The FarmDoc team will discuss how producers might go about mitigating these losses this week. They'll host a free webinar Thursday morning at 11 a.m. Central Time. Look under the webinar events section on the FarmDoc Daily website to register, or you can go to our website at willag.org and look in the calendar of events. That's 11 a.m. this Thursday, a FarmDoc webinar. You can register for free right now. You're listening to the Closing Market Report on a Monday afternoon. Our theme music is written, performed, produced, and courtesy of Logan County, Illinois farmer Tim Gleason. I'm University of Illinois Extension's Todd Gleason. Chad Hart, Extension economist at Iowa State University, is now on the line with us. Hi, Chad. Thank you for taking some time on a Monday at the time you and I are talking in the 11 o'clock hour when the markets have begun to rally. It appears that some war premium has been put back into the marketplace. I'm wondering what you think about that to begin with, and whether that is something that producers can count on over time, relatively speaking, or whether it dissipates quickly.
It's not that we can count on it over time, but I will say it this way. The longer the conflict goes on, and the more we see, let's call it, the bottleneck within energy, that means we know that those energy costs are going to stay higher for longer and longer, which lends some credence to, yeah, we can bank on a little bit of this. The other thing I'll say, though, is that when we look at, putting this war premium on at basically the same time we're putting some weather premium on, so we're getting reinforcing shots from two different factors helping push prices higher.
Yeah, because as we talk, I think probably the rainfall has passed you by, running through us. We're here on the 27th day of April, and while we have been ahead, this will slow things down, and I guess that's the kind of weather premium you're talking about, or maybe some of the drought in South America for corn as well.
Well, that's the deal. I think we can flip this several different ways. As we think about Iowa into northern Illinois, we've seen, if you will, a little bit too much water show up and slow us down. At the same time, too, when you look across the U.S., roughly 60% of the continental U.S. is right now in some sort of drought conditions. And we've actually been watching, especially the more moderate to extreme drought areas, getting larger. So we've got places where it's too wet. We've got places where it's too dry. And as you mentioned, internationally, we're sitting here going, okay, if we're staring at a super El Nino possibly later this year, we know that's going to have a large impact as we look down towards South America. It's also going to impact Australia. And let's face it, we know that hits the Black Sea region as well. And so you're looking at weather conditions pulling in both directions sort of on the marketplace, depending upon what area of the world you're looking at.
Futures, however, look forward, but the cash marketer really needs to think of the marketplace, I think, as normal until it's not, as they try to make decisions about when to market. What are you telling producers?
Sure. And right now it's a story of staring at whether we're talking old crop or new here. As we're looking at new, one of the things that's fascinating to me right now is, as you look at the corn market, for example, what we've built up over the past couple of weeks is putting us back up near those highs we saw when the war first broke out. So it's, again, offering a spring opportunity that we haven't seen in a couple of springs, where we could be making some moves here. It's, a good 20 to 25 cents above that insurance price we captured when we bought our crop insurance. And so that's not a bad little captured there as we're looking at new crop. Old crop, I think, is one of these deals of folks are trying to ride this wave out and just see how far the war and weather premiums could take us to try to take advantage of the seasonal highs that we tend to see here in the late spring. And so I think it is helping support some folks that have stored, last year's record crop for a while, giving them some opportunity to maybe capture better prices and recover some of those storage costs that they built up.
Talk to me about the fundamentals of supply on the global and domestic level, and how they play off against one another, maybe particularly with wheat, because wheat and corn are a different thing. Wheat where we are the last resort, corn where we are the first resort.
Yep. And, when we're looking here, I think we're used to thinking of us like in the corn market, where we are the dominant market. When you think about global supplies of corn, we are basically the biggest producer, but we're pretty much the biggest user as well. And so therefore, whatever's really happening in our market sort of changes its way through the rest of the global corn market. Flip that on its head when you're talking about wheat, and I would argue we're making that change in soybeans as well, where we're not the dominant market. We are we're a big player, but we're by no means the biggest player. And that means that global conditions outside the U.S. can have a much larger influence on our market here in the U.S. Like I say, we've been here for a while. When you look at, we have decent exports, but we're not the biggest exporter. In fact, we're sort of a residual exporter in some of the markets that we deal with there. And so we definitely see more swings due to what's happening with Australia or Argentina in those markets than we do, say, in like the corn market. And I think that's something that's developing as I look at soybeans, because we used to be the dominant market there, and now we're not, with Brazil taking the top spot on production and China taking the top spot on consumption.
When you look forward for soybeans, particularly as it's related to renewable volume obligations or the RVO, biofuels, biomass-based diesel of some sort, whether that's FAME or renewable diesel, and domestic consumption goes up, does that necessarily mean that we will have a more stable internal price, but not widely ranging compared to what the futures market might be?
I'm going to argue not necessarily, because it really depends upon, are those sales that we're doing on the biofuel side truly replacing everything that we're losing when it comes to the export markets? That has been one of our challenges here. And in fact, as we look over the past 5 years we've had in the bean market, we basically had usage matching our production. We've been holding ending stocks at fairly low levels across the past several years, and yet we've watched prices decline over time because of what's happening in the global space as opposed to here what's happening in the U.S. space.
What are your thoughts as it relates to the summer months this season? I know you've been looking at, of course, as you discussed, the dry areas around the Midwest, probably thinking about 1988 is my guess. Should producers think that way?
I would say we need to be watching for it, but I wouldn't be betting on it or expecting it. One of the things that if we think back over the past 5 years, basically the drought we see today, I would argue is, still hanging on from the one that we had, starting back in 2020. We've been watching this drought sort of move throughout the country over the past 5-6 years. And we've been watching it grow in scale and size sometimes, sometime throughout that 5-year period, but yet it's never really taken a big bite out of production. There is concern about that as we're looking forward, but we also know that, hey, we've experienced, waves of this drought already over the past 5 years, and we've been able to produce through them. So it'll be interesting to watch. Like I say, it's kind of weird to me that we're sitting here in Iowa and Illinois. Like I say, we're actually a little too wet, where other parts of the Corn Belt are definitely too dry, and that's been leading to inconsistent planting progress across the country. But that doesn't necessarily mean lower yield potential when we come to the end of the year.
Thank you much. I appreciate it.
Thank you.
That's Chad Hart, agricultural economist with Extension at Iowa State University in Ames. The United States Department of Agriculture will update its planting progress at 3 p.m. Central Time today. Let's take a look at the weather forecast for the growing regions across the planet. Mark Russo is here. He is with EverStream Analytics. Hi, Mark. Thanks for being with us. Little rainfall coming across the Midwest today. Pretty good-sized storm. I'm wondering what you think about it in the Corn Belt and the remnants of it tonight, too, as well, and how much rainfall we might have in the I states, Iowa, Illinois, Indiana, maybe Minnesota, Michigan, Ohio, those places.
Yeah, we're seeing a pretty potent storm system cross the Corn Belt here today, and this is producing a myriad of weather, ranging everywhere from heavy rains to winds to then some tornadic activity, and also some larger hail and straight line winds, all associated within this general storm system that in of itself is producing just some windy conditions because of what we call the pressure gradient associated with it. But once that clears the area here later on tonight, early tomorrow, then there will be several days of drier weather, and before another system here comes through. In general, though, it's pretty close to a normal type of springtime pattern. Again, several days with rain, then you go through several days of dry weather, but then rain's returning. Right now, we're not seeing any kind of real excessively wet pattern. So for some of the areas that did pick up like 1 to 3 inches of rainfall or localized higher amount from this current storm, upcoming systems don't look quite as potent or will produce quite as heavy rainfall. So that's the precip side of things. On the temperature side of things, did want to highlight that after another few days of generally warmer bias temperatures, that then readings will cool down to slightly below average readings by this upcoming weekend and then continuing into next week. So any corn or soybeans that have been planted, that's going to slow things down a little bit. There's no frost concerns or freeze concerns at all with this cooler weather, but just from a growth standpoint here, emergence and growth, that cooler weather will keep things on the slower side.
We're talking every 3 to 5 days for the rainfall events?
In general here, and with the upcoming systems, that activity within those windows of rain will be generally light to moderate and scattered in nature.
And then if you turn your attention to the plain states from North Dakota to Texas, what do things look like there?
Yeah, the area that we're watching with continued missing out on rainfall, that's areas of western Kansas into eastern Colorado. They do have some opportunities for rain. These systems that are impacting the Corn Belt are tracking also across the plains, but they're producing the higher precip amounts further east. So for those western areas, the amount of rain here doesn't look significant enough to improve soil moisture and turn around the situation. It'll help a little bit, but more rain is needed. And at this time, we're not seeing any kind of big pattern change that would produce, above normal rainfall across the driest areas within the plains.
Are there other places in North America that you're watching closely?
Yes, we are watching the Canadian prairies where spring wheat and canola planting is just starting up. Usually spring wheat starts to get planted here in late April and early May, and then canola a little bit later. And right now, conditions are not very good for planting across Canada, primarily due to a snowstorm that's impacted most of the prairie provinces. And that combined with some cooler weather is going to keep things on the slower side from starting up as we look out over the next week to 10 days. After that, though, there are some indications of warmer and drier weather, kind of looking out towards later next week and beyond. So if that rolls forward, that will begin to improve the situation as we start progressing through May.
And if you could provide a word maybe on the safrinha or second crop corn in Brazil.
Yeah, overall, still very good here, although some drier and warmer conditions at this late stage of the season likely depleted a little bit of soil moisture in places such as Center West, but they had a good soil moisture base going into this kind of end of season warm stretch. And then at the same time, the southern belt in around Paraná has received some meaningful rainfall lately. So all in all, no big issues for safrinha as we end the rainy season there.
Hey, thank you much.
You're welcome, Todd.
Mark Russo is with EverStream Analytics, joined us here on the closing market report for this Monday afternoon. Do visit our website if you get the opportunity at willag.org. That's WILLAG.org. I'm Illinois Extension's Todd Gleason.